Hello, this is Dean Malone with CompositeX. I hope you're doing well today and you're getting some good trades. In today's video, I want to answer a question by one of our Dodge traders. And the question is, when the market goes beyond the buy target number 2 or the sell target number 2, is there a way to know when the market might reverse? And I think that's a great question because I've done some other videos about determining a higher target for the market to potentially reach. But in today's video, we're looking at something different. We're anticipating when the market might reverse or retrace, because the market's gone so high, like in the example of the euro pound, that there are some expectations to see it come back. Now, it didn't make much of a move today. Again, the euro pound doesn't make much of a move. It usually stays in about a 45 pip average daily range, and that's about what it did. But this goes to show you the possibility of looking for something specific within price to help you see that potential retracement or reversal. What I like to do when I'm looking at price is to look for certain price patterns. For instance, with the euro pound, we have a high, a higher high, and then we have a lower high. That suggests a head and shoulders pattern, which would be a reversal type look or bias to the downside, and we get that move down. Another thing you can do besides look at price is to look within the Trader's Dynamic Index. Let me put it on the chart here. If you're not familiar with the Trader's Dynamic Index indicator, it's an indicator that shows market sentiment, something that I developed a few years ago. And what I like to do is often compare market sentiment to price action. And oftentimes market sentiment will give us an idea of what the market's going to do before price does it. Oftentimes sentiment, and this is just even in consumerism, we see that sentiment in the marketplace often drives the direction of price. If everybody likes something and everybody's wanting to buy it, then the price goes up. When the price gets way too high, then people start looking for a substitute item, looking for something different. And then the price of that item often drops. Well, when it comes to looking at the charts with the Forex market and using the Trader's Dynamic Index, if you look right here, you can see that it too had a head and shoulders type pattern. We have a high, a higher high, and then a lower high. And even further, it has the neckline that we'd often see in a head and shoulders pattern. And notice that this occurred as price was still rising here. So we have a high, and a higher high, but look what sentiment is showing us. Sentiment in the marketplace is showing us that at this point, that was about as high as the market could go, but the price hadn't finished just yet. So that leads me to one other thing to look for in the Trader's Dynamic Index is we could have a particular pattern, but one of the things to look for is to look for divergence. So in this case, we can see that from here to here, we had higher highs in price. But look at the Trader's Dynamic Index, we had lower peaks, meaning that there's divergence in the marketplace. Another potential indication of a reversal or retracement. So again, three things to look for is look for a price pattern within price, look for a price pattern within the Trader's Dynamic Index, or look for divergence within the Trader's Dynamic Index. Let me give you a couple more examples. In the pound, we can see that we had a double bottom right here in the pound, followed by another double bottom seen right here. Then we start looking for price to follow market sentiment, and we can see that market sentiment is starting to rise here. Notice how the market baseline representing the overall market is fairly flat, and current market sentiment started rising, and so did price. Now the price came back a bit, but when it came back, current market sentiment represented by the green and red line did not break below market sentiment, the yellow line, and we got to bounce back up and price followed. One more example we can see in the pound yen, and this is a great example of divergence here, where we can see that we have higher lows and we have in price lower lows. This suggests a reversal in the marketplace. And the market did push back up here to the sell target number 2 after going well beyond it. Now the market's trying to push back down. In this case, I'm watching to see here if the market will come down and then bounce off the market baseline and back up. That's the possibility. If it breaks lower, then I would expect that this low might be challenged and we push lower. So all in all, there are things to look for to indicate that the market has gone as far as it's going to go beyond the buy target number 2 or the sell target number 2. So again, the 3 things to look for is to look for a price pattern in price itself, or look for that price pattern that we talked about in the Traders Dynamic Index, getting this head and shoulders here, or look for divergence. In this case, you're looking for regular divergence, which is typically higher highs in price and lower highs in the peaks of the green line of the Traders Dynamic Index, or looking for lower lows in price and higher lows in the Traders Dynamic Index, again looking for reversal back towards the sell target number 2 or the buy target number 2. Well, this is Dean Malone with Compass FX. I hope some of this information about determining how far the market's gone and looking for a potential reversal or retracement with the dots will help you in your trading. Y'all make it a great day, get some good trades, and we'll talk to you next time. Bye-bye.